Hello and a warm welcome to this week's edition of Innovate Africa. I'm Natasha Jacobs. Now, with a population of over 1 billion and the rise of a burgeoning middle class, the African continent offers an abundance of opportunities for those wanting to tap into its consumer market. On today's show, we'll be taking a closer look at some of the companies that are making headway in the consumer space, as well as the everyday innovations that are making consumers' lives in Africa a whole lot easier. Before we get into our discussion, though, Kenyan insurer UAP and supermarket chain Uchumi have joined forces in order to sell insurance products through mobile phones and load up premiums over supermarket counters, with this innovation expected to propel insurance penetration in Kenya. Our reporter in Nairobi, Cliff Onsero, has more.
According to a global insurance agency, insurance penetration is at 3% compared to countries like China that are on 13%. The rise of Kenya's middle class has created the need to sell policies to this segment group through use of technological tools.
There are so many people who are not benefiting from insurance, yet they would like to benefit, primarily because either we don't have the right products for them or we are not distributing them in a way that fits in their lifestyle. We also know that the mobile phone revolution in Kenya has been one great advancement, and as a result, if something isn't going mobile, people will think that is very archaic. So we want to meet the customers where they are.
UAP and Uchumi Alliance is bringing in is getting out into the counties, into the smaller cities, rather than just the big, ordinary, traditional cities. And that means that even that person in the rural area is able to buy an insurance cover without coming or traveling miles and miles looking for an insurance person, because they definitely will come into the supermarket, and that is where the contact starts.
The mobile insurance purchase system by local insurance company UAP and supermarket chain Uchumi is a first of its kind by a Kenyan insurer, which enables users buy products straight from mobile phones and load up premiums while still shopping.
One can be able to access information about medical insurance and also purchase medical insurance on this platform, pay using different payment platforms, from M-Pesa to your credit cards, Visa or MasterCard, to various other payment platforms that are available. And we have also launched our web application. So if for some reason you don't have an Android phone, you can always access the web app on your phone and do the same thing that you would on the Android app. Pay for your insurance and receive confirmation of payment and your policy document, just as you would with the other traditional methods of insurance.
It has empowered a lot of our people where they don't have to come and express themselves in whatever language, but they can express themselves in the language of the mobile phone within our country. It came into touch in what I would call a need that had taken many years to be addressed.
A possible challenge posed by the do-it-yourself mobile application is consistent connectivity, a hiccup which developers are quick to counter.
We don't want to sit back and wait for technology for the Wi-Fi connectivity and other issues to be resolved before we develop these platforms. So some of these things may have to catch up with us, but we also have solutions for USSD and other platforms that may not require Wi-Fi connectivity.
ICT in Kenya contributes over 10% to the GDP, and this is expected to rise, seeing the increased technological infrastructure upgrade.
Our ICT people and ICT people of UAP, we have had consultation over quite a number of months. And that is how we came up with what you call the Salama Shua. We came with Afya Imara, and we came up with a whole package where you come up to do the shopping, and all you do is just acquire a small package of UAP within the supermarket. UAP doesn't need to be there, but we can do it for them. And we hand over our customer to the insurance gurus who are going to push it after that.
Technology is disruptive, and this system is seen as a threat to hiring manpower, hence detrimental to employment.
Mainly, if you look at people, for example, who live in informal areas, rural areas, far-flung places in Kenya, we don't have agents and brokers in those places. These people also need to buy insurance. There are also those who feel more comfortable buying directly from insurance companies, even without mobile phone. They still come. And all you're saying is you want to make their experience more interesting. The broker will continue being important.
Other similar rollouts are expected across East Africa, and this will enhance uptake of insurance penetration to double digits in East African nations. For Innovate Africa, I am Laban Cliff, Ontario.
Now joining me in studio today to take a closer look at consumer innovation in Africa is Tashmia Ismail, the head of Inclusive Markets Program at Gibbs, Neil Maslen, the president of BMGI South Africa, and Ryan Bacher, the CEO of Netflorence. Lady, gentlemen, thank you so much for joining us. Tashmia, let's start with you now. The insert set the scene for us and a lot of aspects to talk about, but let's start at the bottom. And that's the concept of innovation. You know, for some people, they think it needs to be this grandiose invention, this change, but sometimes it's as simple as addressing a need, and in this case, insurance.
Absolutely. I think what we see is there are many insurance models across the world, but in Africa, they have to be adapted for people who live on under $8 a day and who live without infrastructure. So we're seeing incredible innovation, not first movers, because first movers burn a lot of money, but adapting insurance models using mobile phones, as we saw in this case. The same company, UAP, doesn't only work in urban areas with supermarkets like Uchumi. I've been to little farms, smallholder farms, 6-7 hours away from Nairobi, where 2-acre farms have insurance, which is bundled with seed and fertilizer. So there are lots of exciting collaborations, connections to be made in innovation. I think the trick about innovation in Africa is, rather than it being brand new, is about collaboration. Who do you work with? Who can fit exciting pieces into this puzzle?
Neil, let's talk about that collaboration. And earlier you mentioned offsite about adaptation. Now, where does that fit into the innovation scale?
The interesting thing is that successful companies don't necessarily have to be those with the newest, the greatest, or the quickest. They have to be those that are most capable of adapting to a change in the marketplace. Now, let's talk about how you do that and what the practical steps are to allow that to happen. And I'd like to pick up on the point of networking. There are 5 fundamental discovery tools that entrepreneurs can use and are very appropriate within the African context. The first one is observing. So the most important thing to do within, I think, our context is to be conscious of what you can see happening around you, the developments, the challenges, the needs, and this can be driven top down and bottom up. This can be about the consumer identifying an opportunity. It can be about organizations identifying opportunities. The second thing you need to do is to question. Now, I spend a lot of time traveling around the world and talking to different people, and if there was one common thread that comes up more and more often today, it's the fact that we just don't ask enough questions. And we don't ask the right questions. We become so focused on the answer, we forget that if we're asking the wrong question, the answer is irrelevant. So if we're observing, if we're questioning, the next step very much relates to what you were saying, in that we need to network. And that's where people like Steve Jobs, Jeff Bezos really got it right. They observed, they watched, they spent time developing ideas, networking with others, and then they experimented. And then from the experimentation, they moved on to the adaptability or the adaptation. So questioning, observing, networking, experimenting, and adaptation. Those are the 5 key tools or steps, if you will, that entrepreneurs can use within the African marketplace to increase their ability to take great concepts such as insurance to the consumer within the African environment.
Now, Ryan, you are an entrepreneur. You're not in the insurance space, you're in the flower business and the gifting business. I googled order flowers online in South Africa earlier, and I got about 10 names. Ironically, Netflorence was at the top, but competition is rife in the space right now. You were a first mover, you've developed your product, but what kind of innovation drives you to stay top of your game in the South African and in the African space?
Right, so I'm glad you found us first. That's good news. That means our SEO, which is search engine optimization, is working. So what we're finding more and more is that the consumer at the moment is far more expressive than they used to be. And they're doing that on various tools. They've got all sorts of social media platforms, more comfortable to email, and some is good and some is bad. And you know, they tell you when you're good and they tell you when you're bad. But if you can listen to what they're saying, it's making it ironically easier to innovate. So I'll just give you two examples. The first is that although we tell our customers overnight that we've delivered their gifts, that wasn't good enough for our customers, because some of them have done something not so good, and they're delivering flowers to their wife to apologize, and they need those flowers to be delivered.
Or to the mistress.
Right, and they need those flowers to be delivered before they walk in the door. So we understood that there was a challenge, and they were telling us that. So now we've got real-time delivery notifications. So if it's delivered at 2, they get it at 2. Now, we didn't come up with that idea. The customers are telling us there's a problem. Overnight is too late. I need it earlier than that. And the second issue is mobile. So we've noticed for the last 2 or 3 years that many of our customers are using us via a mobile phone. And the process of ordering on a normal mobile phone isn't great unless you've got a Mobi site. Yeah. So we went live with our Mobi site a few months ago, and that's helping our customers. But again, that's not us innovating because we came up with the idea. The customers are telling us that that's what they want, and we're trying to respond in a way. And I would, firstly, it's iterative. So you don't have to bang and come up with the biggest idea. But secondly, it's collaborative, but we're collaborating with our clients, not necessarily suppliers or partners, and then that's working for us pretty well.
Just me, he's used the word client, he used the word consumers, the development of consumer innovation. Now, traditionally, innovation is associated with boffins at the university or expensive R&D divisions, but we see this similarly changing, as he mentioned. Now, if you're not a big corporate who has a lot of money in R&D, is it about, just interacting with your consumers and your customers to drive that in your own company?
So you're going to get tired of hearing this word today, networks. And Neil mentioned networks. And we should just talk about that these networks are not just at this very formal level. It's not about the partnerships that you have with other companies. So again, let's use UAP. This smallholder insurance that they had. Yes, the one set of partners was Safaricom, which owns M-Pesa. So you could make the mobile payment through a mobile phone. So even if it's a Maasai warrior up in the Great Rift Valley, he can get that payment on his phone. That was one of the partners. The second partner was this multinational, Syngenta and Bayer, the fertilizer company. But the key network that enabled UAP to understand their customers was on-the-ground players, the on-the-ground network, and they used agrovets who are scattered across rural Kenya. They are the point of information, the point of reference for all these little farmers. And I think this is one of the ways in which a company which is usually located in an urban area can tap into and access this mindset of consumers across the market. Find those local reference points, those local people who have the trust and conversations with local communities.
Now, Neil, we've seen an uptake from big business as well. I mean, I read an interesting article in The Economist that mentioned places like EA Games, Bell, which is a safety equipment manufacturer, and then even BMW, getting these crowdsourced innovations and then sending them to engineers. But does this work for any industry and any business, or do you take it on a case-by-case basis?
I think innovation is always something that, by its nature, the fact that it's innovation, has to be taken on a case-by-case basis. And interestingly, it happens at many different levels in society. I attended a lunch 5 weeks ago in London with the president of Rwanda, and the context of that meeting was getting like-minded business people into the same room to talk about business opportunities within that country. Now, that for me is a form of innovation. It's about highest level politicians observing, networking, questioning, and then networking again. And I'd like to equally stress the importance of that word and bringing together.
Word of the day.
Definitely the word of the day.
Open innovation.
Open innovation. Bringing together those networks in such a way that we create opportunity. Because I think one of the things that we misunderstand is the difference between ideation and innovation. I sit in a lot of boardrooms and I hear this word innovation thrown around frequently. And in fact, sometimes it becomes the word that an executive uses when they get stuck. And they'll talk
we need to innovate.
We need to innovate. Now, of course, what we should remember is that innovation requires one key aspect, commercialization. So innovation, by default, is perhaps a new product, a new service, entering a new market for the commercial benefit of supplier and consumer. If it's not commercial, then it's ideation.
So people must buy it. Then it's innovation.
So we've got to buy it. And if we come back to what Ryan was saying in terms of some of the changes in what they're offering as the NetFlowers Group, you take Amazon at the moment. So FedEx were always incredibly well known for we'll get it there the next day. Amazon have now realized that that's just not good enough. And if you talk to people in the US, you'll find that the amount of shopping, and we really can't relate to this yet.
Yeah, that is done online these days. Yeah.
The vast That's right. The vast percentage is actually done through sites like Amazon, to such an extent that you've seen in the last couple of weeks in media comments around the increase in the number of staff they're employing. And why? Because they're having to set up a distribution supply chain that enables them to deliver same day.
So can I add to this? So we're talking about wanting consumers to adopt. And how do you do this? You don't come up with an idea and say, in 3 years' time, this is what our revenue will be. It's about this lean business model. So when MTN tried to launch mobile money in Rwanda, they didn't have a plan and set in stone. What they did was they piloted with 200 agents all across Rwanda, understood what drove those agents to sell MTN's mobile money, and constantly adapted their business model as they got feedback and intel from the ground, from that network on the ground.
Why that works is there was a great book that was released last year by Zook and Allen talking about repeatability of successful businesses. And they identified 3 key attributes after having investigated some 7 stock markets for those businesses that were the most successful. And the third point they make is that businesses that are the most successful in these days, with the rate of change, the changing times, the shifting economics, are definitely not those that have a shifting strategy. They're the ones that have a constant strategy, but they have the ability to perceive and to adapt to the change built into the organization. That's a good example of how MTN managed to do that. They had a good concept, they understood where they wanted to go with it, but they needed to be able to adapt to the environment, to the consumers with which they're going to work. And that again is something that we see happening in companies that are taking concepts to market successfully.
Because this market is evolving in nanoseconds.
So you have to be flexible all the time.
Have to be flexible. Google is going to be launching blimps across sub-Saharan Africa. They're going to carpet sub-Saharan Africa with Wi-Fi. This means that all these business models that depend on USSD menus on mobile are going to have to shift to take advantage of this broadband that's going to be available.
Technology at the end of the day is disruptive. Now we have to go to break. Well, we're going to a short ad break. More on Innovate Africa straight after this. Stay tuned to CNBC Africa. Welcome back to Innovate Africa, where we're taking a closer look at consumer innovation on the African continent. Still with me in studio is Tashmia Ismail, the head of the Inclusive Markets Program at GIPS, Neil Maslen, the president of BMGI South Africa, and Ryan Bacher, the CEO of NetFlorist. Now, Ryan, let's start off with you. We just spoke about the role of technology and now how that's changing nanosecond by nanosecond. Interestingly enough, your model still has a call center. Now, if I think about my grandmother and she wants to order flowers, she can basically answer her cell phone, but going online is non-existent. Is this still an important part to cater for more than one part of the market who's not that tech savvy?
Right, so we see ourselves as retailers. We don't see ourselves as a technology company. So, for example, we've got a mobile platform because that's now a new technology that's been enabled to order flowers. People still want to speak to people. And we find that a lot. We get a lot of people who call our call center and we listen to the calls, and they're not really asking anything other than to make sure we're there. They just want to check that if something goes wrong, they can pick up the phone and somebody's going to answer the phone instead of sending an email and then you kind of don't know what's happened to that email. So although we do get orders from the call center, the vast majority come over our website, but our call center it's a trust element. And in the new economy, trust is so important because there's so many fly-by-nighters and people are changing things all the time. I think that trust, and it's something that retailers knew 50 years ago. You know, the big brands of old time, they built that trust. And new businesses, I think, leave that behind a little bit. And consumers still want to deal with people they like, they trust. Our call center plays a major role.
But Tashmia, how do you deal with it when it is technology driven? I mean, we just saw with the UAP model, they're speaking and saying that, you know, a lot of these rural areas don't have insurance salesmen, the middleman, and it's being driven by mobile. So how do you build trust if it's completely electronic?
We look at Blue Label Telecoms. Blue Label Telecoms had partnerships with gospel singers, tribal chiefs, soccer teams. And so they used local reference points that were important to people. If we look at a bank like Standard Bank, which is one of these old brands that had trust, but very much in urban centers, you can't take this mall branch model and take it out into this inclusive banking division, which is about banking the unbanked. So what they did there was started creating micro bank branches inside spaza stores. And that spaza store has the local trust of the community. If there's an issue, I don't have to take a taxi into town to go to the bricks and mortar building. I can go to my local spaza store. There's that trust. And they're equipped with technology. So they've got a point of sale device. Customers in a township can walk into a spaza store and ask for a bank balance, make a deposit, make a withdrawal. But that's using that local person that knows the family for years.
There are two factors that help us to build trust with our consumers, and this becomes more important when technology is more part of the process, because we would naturally perceive that a gadget as the linkage between myself and my insurer or my bank is not as trustworthy perhaps. But the truth is that trust for us always comes down to two things. The first is credibility. And credibility is, in fact, in some respects, easier to establish with the technology involved because you have repeatability. You have the same thing happening each and every time. Now, of course, if that fails, as we saw with RIM some months ago, it raises questions. And we've got to make sure that that type of incident doesn't happen. The second leg on which trust stands is intimacy with the consumer. So I would support what Ryan said. I think it's terribly important to maintain a call center, because when it's necessary, the consumer really wants the ability to be felt of as being a person, someone that's cared about, someone that there can be a conversation with. But we can still use these two components. Even though we have technology, we can go back to credibility and to intimacy. And we want to make sure that no matter what the model is that we build, and that's exactly what was being referred to, that we have the ability to establish credibility and intimacy.
But these customers are evolving. They're not, you're not going to always have to have a call center. If we look at Kenya, when Safaricom started with M-Pesa, it was first just remittances. I send money from point A to point B. And people picked this up quite quickly. Last year, we have M-Shwari, where Safaricom now partners with the Commercial Bank of Africa. And they say, well, now you can do everything that you would do in a bank branch on our platform. Loan, insure, save. And 1.6 million customers in 3 months start using an online banking platform. But this is because the Kenyan consumer, through using M-Pesa, has evolved to a more sophisticated consumer.
Ryan, but we also sit with the generation 2000s, the ones who have conversations on WhatsApp and Mixit and all these types of programs. How are you adapting your model to this new generation of consumers who can't even pick up a telephone to have a conversation?
So even before that, I think at core, most people sell something. They sell something, and it can't be that it's this solution or that solution is that. It's got to be what the customer wants. And there are businesses like Amazon where they're an online play. That's what they do and that's what they sell. And they're old style brick and mortar retailers who sell furniture, and that's not going to be sold on the internet for a long time. And they've got to beautify their shops. They've got to work out when people are walking into their shops. Yesterday 100 walked in and 20 bought. Now they've got to get 100 in and 30 must buy. And that's how they're going to improve. So I don't think it's necessarily technology. I think innovation can exist without technology. In our business, it's mostly about technology because that's where technology play in a way. But each business has to understand what their customers want and how their customers are moving. And it could be banking in a mobile platform. It could be having a coffee shop in a furniture business. I don't know what that is, and that will be innovation as well. Innovation doesn't equal technology. Technology is it's a way to manifest that innovation if that's the right way to do it. But I mean, coffee shops in bookstores 20, 30 years ago worked unbelievably well. Now bookstores are almost non-existent because of Amazon. The things move around. It's not all about technology.
I find a very interesting example before we move on in India, actually. It's called the Dalawala system. And it's the delivery of meals. And I mean, we're talking 450,000 home-cooked meals that reach their destinations through bicycles and through trains. Sasmia, high-tech, low-tech, it's not always about technology, is it?
I think we've been focusing on technology quite a bit because in Africa, the infrastructure is just so underdeveloped. And so the technology is a means to circumvent
it's a big enabler for new ideas.
Exactly.
Yeah.
You can get over large distances and you can get into the pockets of people. So it's a tool, and that's probably why we focused on it so much.
Sure.
But absolutely not. It's not only about the technology. Simple changes, simple business models, collaborations are also the way to go.
Neil.
I couldn't agree more. And I think Africa is a prime example of where we need to, yes, when it's appropriate, leverage technology, but also look past it. At the end of the day, as Ryan said, it's about a consumer wanting to buy something. So the entrepreneur, and we need to become more and more conscious of the role of the entrepreneur, needs to look at the consumer base, and the question they need to ask themselves is, fundamentally, what is the job to be done? You know, when Henry Ford created the Model T, he said that if he went to his consumers at the time and asked them what they wanted, they would have said a six-legged horse. But the truth is they wanted faster, quicker, more reliable transport. Now, if we adapt that to where we are today, some of the best and the greatest innovations are often the simplest ones. Yeah. And if people can have a look, they can observe again, coming back to those 5 skills, they can ask questions, they can network, they can experiment, but they can look at a situation and say, what is the real job to be done here? Let me think about that, because maybe everyone gets stuck in a certain mindset and a certain paradigm. Psychologists call this confirmational bias. We love to ask ourselves or to seek questions that support what we're doing already. The truth is what we're doing already may not be right. And we've got to teach ourselves how to ask those breakthrough questions. We can look past that. We can focus on the real job to be done. And then it's definitely not about technology, although it may be part of it. It's about asking that fundamental question, how do I satisfy my consumer? What are they really looking for? And then maybe